And to understand health savings accounts, you have to have some basic knowledge of just health insurance terminology. So let's break some of this down. The first term that I want you to know is the deductible. And the deductible is the amount that you have to pay towards your care before health insurance companies step in to help with the costs. As an example, you could have a $1,000 deductible. That means you have to pay $1,000 towards your care before you get to your co-insurance period. And coinsurance is a range of healthcare costs where, when you're in this range, the health insurance provider is going to participate in your cost at a certain percentage. As an example, if you have a $1,000 deductible and an 80/20 coinsurance rate, you pay $1,000 in the first range of cost with no help, and everything from $1,000 to your out of pocket max is covered at a rate of 80% by the healthcare provider, with you being responsible for the remaining 20%. Now, your out of pocket max is the maximum amount that you have to pay towards your care before the health insurance company covers covered costs at 100%. So, if your out of pocket max in this scenario is $2,500, you have your $1,000 that you pay towards your deductible alone. You pay 20% of your costs until you have met your $2,500 out of pocket max, and everything from there beyond is covered at 100%. I tell you these terms first because conceptually you can understand that the more the health insurance company potentially has to pay, the bigger risk they have on the back end, the more they're going to charge you on the front end. So if you have a really low deductible and a really appealing co-insurance rate and a low out-of-pocket max, you're probably going to have a pretty expensive monthly cost for your health plan. But the higher your deductible, the lower your co-insurance rate, the higher your out-of-pocket max, the less you pay, and that would be what's called a high deductible health plan. You have a plan where you are responsible for more of your potential health costs. And a high deductible health plan, because you're responsible for more, has a lower payment. Well, that has a benefit in and of itself when you're talking about trying to juggle the things that you're trying to juggle in addition to your student loans. So, a high deductible health plan for a healthy person with typically low health costs represents an opportunity to save some money. Although, if you're a person who doesn't have the best health or has to see certain specialists or has consistent out of pocket medications, it may be a risk that you don't want to take on because of the potential of you paying more on the back end. However, for those who choose to do high deductible health plans, they can be paired with another pre tax benefit called a health savings account.